Hello trader, welcome you to today's section, and in today's section we'll be talking about the supply and demand. So supply and demand is one of the most powerful concepts in trading, especially in trading forex. So these zones, the supply and demand zones, shows you where big institutions like banks are likely placing their orders. And these zones often cause a strong reversal or a continuation. So now, how do we get to spot supply and demand zone and apply it into our trading? First things first, you have to understand the basis. When I mean understanding the basis, you have to understand what a supply zone actually is. A supply zone are zones where sellers exceeds the buyers. Price are likely to drop from the supply zone. You can also call a supply zone more like a zone acting as a resistance. And also we have the demand zone. So the demand zones are zones where buyers exceed the sellers, you know. So most likely price is likely to rise. So if you look at it from the actual day-to-day perspective, they say the supply zones are zones where sellers exceeds the buyers, meaning that price are likely to drop from that zone because we have so much supplies and we don't have people in need of that supplies. So most likely price will drop for the people that need it to probably hurry to come and get it at a discounted price. So moving forward, now you understand the basis of what the supply and demand is. Now, in order for you to be able to identify these zones and be able to place a trade using this supply and demand, next thing you have to look for strong moves. When I mean strong moves, you have to look for areas where price left aggressively. You could either see a big candle with little or no wicks. You could either see a zone where price consolidates then drops heavily. That consolidation is what we call a supply zone. So now on our chart we can see currently here we have price give us a big move. We have price give us a big move. Here you can see we have price give us a big drop. So now, like we said earlier, we are looking for areas where price left aggressively. So now this is an area where price left aggressively. So next thing you have to do, you have to identify the base. you know Before a strong move, price usually pause or let's say move in a small range. you know that small range, that base, is where you identify as your zone, either a supply or a demand zone. So now the longer price stays at that range, that's you know the more likely orders are being stacked up at that range. So now if you look here, now price has been ranging around here, giving us little candles. So now we can now say this is what more like our supply zone. So in order to do that, what we have to do now, we have to spot the zone. To make it easier, I tell people you can use the candle before the aggressive candle. You identify the week to week of the candle. Okay, so I'm doing this now. So now currently, now this is what we call a supply zone. So after identifying this zone, now you have to wait for price to come back to this zone. Once price comes back to this zone, you watch how price reacts at this zone. You could look for candles rejection, you could look for engulfing candles, you could equally look for a shift in the market structure around this zone. Why? Because this zone was identified as our supply zone. So most likely we are expecting price to get back up here and possibly give us some confirmation and drop down. So now let's actually look for a back test on the supply and demand zone on this particular pair, USD CAD. So at this point now, if you look here, you can see at this point, this here was an aggressive movement compared to the series of candles that were being formed here. And we are looking at spotting our zones, you know, after we identify a zone where price left aggressively. Aside that, we also want to see a pause, or more like a small range in price action around that zone. And if you look here, we can see all of this. And now looking at this candle now, you see it has no wick. So we said we are looking for zones where price left aggressively, either with a big candle or a little to no wick. So now I will be identifying here as my demand zone. I told you can use the wick. So now after I do that, to make it easier, I could just extend this to the right. Extend to the right. Okay, that's great. So now this was a zone I identified as our demand zone at this point. Sorry. Okay, week to week. So now you see after price left aggressively, price rallied all the way up, and boom, price came back to that zone and gave us some confirmation using the candlesticks pattern. And now, you can see price is currently moving back up. But then, for the supply and demand zone strategy, one thing you have to always take note of is what the higher time frame says. When I mean the higher time frame, I mean what the overall trend of that particular pair or currency is. That would not give you an insight to the direction you will be, you know, holding on your position to for a longer period of time. So for this now, you might just want to buy, from this demand all the way back to this supply, or then you could use your Fibonacci retracement to get your TP1, TP2, TP3, and all of that. Let's see if we can be able to identify. So okay, voila. So you're looking at this from our Fibonacci retracement, so you can see that price made up to a 50% retracement, of the aggressive move, which was the drop. And going by the supply and demand strategy, you must have found your entry around there with your stop loss slightly below the zone. And looking at this, you'll be able to achieve a 1:10 risk to reward ratio. So let's look at this same supply and demand strategy using another pair. Let's take a look at a pair like Euro USD. The supply and demand strategy is one of the easiest trading strategy, but then it deals with a whole lot of patience. Okay, so this is Euro USD. Okay, looking at this, you can see this is the aggressive movement we are talking about, and this was a little rally before that aggressive movement. Like I said earlier, you can use the previous candle before that movement, the week to week. So now this is it here. Week to week from the candle, and you can see that price came back to that zone, tested the zone, respected the demand zone, gave us, if you look at the candlesticks, you must have found a reversal candlestick pattern to why, you know, you can be able to go on a buy. And if we also try to look for a back testing scenario here, definitely we are going to find one. Definitely we are going to find one. I think around here I can see a strong shift in the market. Then also let's see GBP USD. I'm just trying to explain this supply and demand zone using different currency pairs just to show you how easy it is to spot these zones. So this is GBP USD. Pardon my network. Yeah, pardon my drawings. I already have some analysis on this pair currently. So if you look at GBP USD now, you can see this was the aggressive movement, the shift from the current price, where price was doing a little bit of rally, more like a pause, and then this candle was a candle that had no wick, and price shifted from it aggressively. Like I said earlier, your supply and demand, you can always easily use the previous candle week to week, but as a beginner, is also you can equally use the full body of the rally, just so you don't get stopped out easily. But then using the week to week, once you're already good in making your analysis, would give you a tighter stop loss, a better risk to reward ratio. So on this GBP USD, yes, you can see that it is okay for price not to activate your order, because what happened right here, price came down all the way, got so close to your demand zone, but price didn't activate your order. So at this point, all you just have to do is to wait, to see if possibly price might come back to this zone a second time and give you a candlestick confirmation for you to ride on the trend. So I think with these, you can see how easy it is to spot a supply and demand zone. The only thing you have to do is you have to have your checklist. You know, first things first, you make sure you understand the basics of the supply and demand. You look for a strong move, you know, then you identify the base. When I'm talking about the base, I'm talking about the pause or the little rally, before the strong move. Then also you could also consider if this your zone, your supply and demand zone, is more like a fresh zone or a used zone. When I mean a fresh zone, I mean it's an untested zone. So untested zones tend to have more strength, are more stronger than a used zone, a tested zone, you know, because once price tests the zone and returns there, price might weaken that zone. So there's every possibility that at the second touch or the third touch, this zone might not hold. Because if you look at it from the beginner's aspect of forex trading, you would see that sometimes the double bottom or the triple bottoms are always broken. Then also you move to your time frame. you know the higher time frame gives you a stronger confluence. So if you're spotting your supply and demand on a lower time frame and the higher time frame is saying otherwise, then you should know that your current setup is more like a scalping setup to you. Then you wait for confirmation, right? You watch how price reacts. Once price gets You wait for confirmation. Sorry, the inverter is down. You wait for confirmation. You watch how price reacts once it gets to this zone. When I mean confirmation, you look for rejection candles, or your engulfing candlestick patterns, or a shift in the market structure, right? Or a shift in the market structure. Then you are good to go. So I think with this, you can be able to spot and trade using the supply and demand trading strategy. Very easy. Very easy. So if you have your questions, we are always available to respond to them. And if you would like us to do a back texting for a particular pair for a particular duration, feel free to also let us know, either via the comment section or on our Telegram community. Thanks, guys, and wishing you a successful trading week ahead.